Hello, Market Club members everywhere. Adam Hewison here, co-founder of Market Club, with your midday market update for Monday, the 23rd of July. And what is it going to be, a Black Monday or a buying opportunity? With all eyes on Spain and the dismal performance in Europe this morning, U.S. equities are under heavy pressure this morning. The question is this a buying opportunity? We don't think so. As we've been saying all last week, the equity markets are coming off a cyclic high period and should be on the defensive for most of the week. Many companies will be reporting earnings this week, including Apple, the big one, and Facebook. Apple, can it turn the tech sector around? I don't know if the psychology is so negative right now. Here are the key levels to watch this week. S&P 500, key level 1325, currently trading at 1338. Dow, key level 12645. And NASDAQ, key level 2,837. These levels, if they're broken the downside, will mean the market will accelerate for the next 4 to 5 weeks. I am traveling today, so I'm doing this report early. However, let's get started with the S&P 500. And as you can see quite clearly, we have broken below the parabolic, which is right there, the PSAR, indicating that the market, at least in this particular signal, is negative. This is not a good signal, the fact that we've broken below this line. The other thing to look at, which I'll scope this in at, is this, and we talked about this all last week, was the trend line that goes from this level right here, the lows that we saw back on June 4th. You scope this in like this, and you can see we're right at it. If we just do a close only chart, which is the important one in my mind, and we just put this into a close only, and we scope this back up to show the levels right here, grab that to there and move that up to here, and you've got the points 1, 2, and 3. If we close down here below 1350, which we mentioned in our report last week, it's going to be negative in my mind. Now we are getting into an oversold condition, but this oversold condition can last, as you can see back here, for several weeks, and that's what we're expecting. So let's see what happens, but our major trend is down based on our monthly trade triangles. They've been down for quite some time. Only the weekly persists, and we expect that to change once we go through the 1325 level. So let's see how that plays out for the week. Let's go to our next market, and that's going to be the crude oil. Now crude oil took a, let's just see here, I tell you what, let's just bag crude oil for the moment. We're looking at the August crude oil. We really want to look at September's. So let me just go back and change that. And we can do that in the portfolio manager. So I'm going to just take this off and put in the crude oil for September. So we'll just put crude oil, and we'll look at the September contract just a little further down here. September right here. And there it is. And you can see it's down almost 3.5%, a huge move down in this market today. So there's the move down below the PSAR again. We are in obviously an oversold condition, but remember our monthly never turned up, and this is one of the things you want to look at with the trade triangles. It never turned up, and I think that's an important element to watch. The daily and the monthly are now negative. Only the weekly is positive, so it gives you that sort of trading range at 55. So let's go back to our portfolio, and I'm going to just take this off right here. So this is the August contract, just zip off. We look at the Dow. The Dow is pretty much the same thing there. Big negative move today. And the key level we talked about there was 12,645, 12,645. It's 12,605. So we have that was the weekly high. So let's see how this plays out. I think we'll see this market under pressure. Again, the key level, if we close below this level here, is going to be very, very negative in my mind. I think we're going to be on the defensive for the next week in this market. So next market we're looking at is the euro. Of course, if you remember, this is Friday's action. We said if it closes down here, we want to be short for the weekend. That worked out really well. And we've taken half of our profits on the opening, and we'll take the other half tomorrow on that 52-week low cycle. We talked about the 52-week rule. Be short on the weekend. It worked out really well in this case. So let's go to our next market. We've got a lot of markets to go through today, and I will be traveling. So this is the NASDAQ composite. Again, if you look at the line, we did break this trend line. If you just go to a close only chart, you can see when we put the trend line in, and we have to have the yellow box. Remember the yellow box right here? When we put the trend line in, you can see we basically broke that. I think that's the one we had right there. So we broke it, basically tested it, went over it, and come back down. If we close below this level right here, which is the 2,865 with 2,859. So if we close at this level today, we'll break this low. This will be a double top, a pivot point indicating further weakness, and possibly the kicker in this is going to be the Apple earnings tomorrow after the close. If we come in and they disappoint, they may match, but the market's looking for so much now. If they disappoint, then we could see this market under pressure. We're looking at Apple later on today, so later on in this broadcast. So let's go to our next market. This is gold. Gold really isn't doing too much of anything. You can see it was down early. It's come back up. It's kind of like a no man's land here. It's a minus 90. The trend is down. The monthly, weekly, and daily are all negative, so the odds are it's going to go down. We talked about this coil position. If you look at the coil, basically, you can see we basically broken out of the coil on the downside. And let me just draw that trend line in we talked about. So this is the trend line we talked about. And if we close, we're really kind of, I would say if we close below 70, 1568, 1569, I would say we've broken out of the coil to the downside. So let's watch that closely today. And moving along, right along, there's lots going on today. Copper under pressure, weekly copper, everything's a minus 100, trend down. Obviously reflecting the economy and what people are thinking right now, and the economy is not good, not just here, but also globally. I think you really want to pay close attention to this market. And let's go to our next market, silver. And silver is much the same, as flattened out a little bit here, but the odds still favor this market going down, minus 100, the trend is down, and we know the trend is your friend. So moving right along to the Reuters Jeffrey Index. This came under a lot of pressure today simply because of what's going on in the grains and also in the crude oil market. Big drop. However, it's still above the PSAR, which comes in today at 296.56. So that's a key level to watch. But nonetheless, the trend, it looks as the intermediate term trend is up, the daily trend is up, only the monthly is down, and that's the one we pay most attention to. So let's go to our next market. Next market is going to be wheat. As you can see, wheat is negative. If we close down here with the action we saw on Friday, which is something to look at, and I think this is the key level. It's going to look as though it's put in some sort of a top, and I think that's the thing. But everything's a plus 100. I wouldn't jump in front of this trying to short it. It's like standing in front of a train. There's no reason to. Absolutely no reason to. The only thing to do is take profits if we go below the PSAR. So let's go to our next market. And the next market we're looking at is, of course, corn. Now, this is corn. You probably saw the news over the weekend. The news, of course, was not particularly good. Drought is expected to continue for the balance of the year, and the balance of the summer, I should say, whatever. But there's not a lot going on in that market other than it's in a very, very strong uptrend. And I think that's the key level to look at right now. So let's go on. But generally speaking, the PSAR now is actually being hit. I would have taken profits on this, at least for the time being, and wait to get back in. If you're a short-term trader, that's the way you would be right now. You'd be out of this market and on the sidelines. So let's go to our next market. That's going to be soybeans. Again, soybeans got a lot of play over the weekend, and that play, to be honest with you, was very positive for soybeans. And I think the key level to look at, again, is where we were on Friday the 20th, which is right here. And obviously we traded on the 22nd, which was, that was Sunday night. That's a dark cloud cover formation. If we close lower tonight, today rather, then I think we probably put in an interim top for the moment, but no reason to sell this market. And the other thing too, which I've been looking at, is a little bit of a divergence here in these markets. You can see right here, we may be making new highs, and really we're making new highs in the momentum. So that's something to look at as well. But again, if you're not in this market, I would say it's very, very risky right now. And you'll have a chance to get in, I think, at better levels. So let's go to our next market. We're going to be looking at the bank stocks. This is JP Morgan Chase, of course. That's recovered somewhat, but it was under pressure. You can see minus 100, the trend's clearly down, and we expect that market to continue lower. We still think the trend is your friend, and that's going to continue lower. So Citigroup, same thing there. This market is really below this level here. Everything's a minus 100. Trend is down. It doesn't look good in my opinion. If we scope this out even further, you can see potentially we could go down and test these lows that we're saying last October. And I think that if we go further back, that's going to be too far back. But you can see this market still is under pressure in my opinion on the downside. We had a sell signal on the weekly at 25.62. So that's working out well. The trend is your friend. We're short from 31.07, so that's still working out very, very well for us. And we're in line with the major trend, which is what we want to be. So going to our next market, and I'll just go back to a 3-month chart and go back to our next market, and that's going to be BAC. BAC looks like a disaster. Not a good close. Obviously, the last 3 days, big down move, minus 100. Trend is clearly down. We may see some coming back into the range here, back into the Donchian trade channel, but clearly we are on the downside with our weekly, monthly, and daily all negative. So going to our next market. And the next market we're looking at is Wells Fargo. Now, all the banks we've talked about, the Wells Fargo we felt was the strongest, and that's a minus 55, meaning a trading range, where everything else has been a minus 100, meaning a strong downtrend. So this is the one to buy, in our opinion, which we buy this stock and then short something else against it. That's the way we've been playing it for the last week, and it's worked out really well. So let's go into our next market. Goldman Sachs, symbol GS, again, weekly sell signal today, minus 100, doesn't look good. I would say that this market could probably go a little bit lower, but we may see a bounce from these levels. But I'm not enthusiastic about the financials right now. Morgan Stanley, same way, acts terribly, minus 100. We probably the lows back here. Let's see where the low is. It closed at 12. Looks like 12.35. We're currently trading 12.30, so we're right on the lows of the previous lows in June 4th. So it looks to me like it wants to go even further down. So let's go to Apple. Apple reports its earnings tomorrow. That's under a lot of pressure today. You've got a PSA or sell in here. And also the other thing to look at is the one thing I thought was very interesting in Apple was the fact that we had this kind of like a little bit of a divergence here. We're making new highs, yet we made a divergence here on the momentum. So again, something to be a little bit concerned about. And I would say the other thing I would look at least today, and there's no reason to take a position before the earnings tomorrow afternoon. It's just like, why? Why would you do that to yourself? The trend is clearly up. It's a plus 55, a trading range right now, but the trend is clearly up. But the one thing you want to look at is on a close-only basis, if we close below this level right here, which is the 598.73, we're 593, so it looks like we could close there. That would not be a good sign for Apple, in my opinion. The other thing, you can also draw a trend line from the lows and extend it here. So that's obviously a very important trend line. I would like three parts to it, but there's only 2 right now. But certainly that is an area, the 590 area is probably good support for Apple. So let's see how that plays out. Last market is FAZ, and the reason I show you this is 3 times the financials, and that gave a buy signal today. Let me just take this off the screen. You can see it came in at 24.24 at 723. That's today, so that just came in. I want to show you that buy signal, and that looks like it wants to go higher, at least to the high end of the 26 area around here, which would be a positive sign. Negative for the financials, of course, but I think this could take place in the next week or so, but we are looking for financials to be under pressure for the next 5 weeks. So let's go to our next market. And this is ultra short, the S&P 500. Again, we have a mixed bag there. It's plus 75, reflecting pretty much this is remarkably good for an ETF. It tracks very well in the S&P 500. And you can see it just is moved up. We did have on this market a bullish divergence. And I'll show you what that means. It means that right here, and this is a higher high, so you can just basically draw a line that's up like that, slightly higher. And if you look at the prices, they're slightly lower. So a little bit of a divergence that we made a new low here, but we did not make a new low in the Williams percent R. So let's see how that plays out. But generally speaking, people are still nervous in these markets. They don't know whether we're going to a double dip or it's a buying opportunity. I think just let the market tell you what it wants to do, and that's what the trade triangles do. So we've covered a lot of markets this morning. I'm going to be traveling back to corporate headquarters. I'll be reporting from there tomorrow, usual time. So Have a great trading day, and this is going to be some great trading opportunities for the second half of the year. So stay tuned to Market Club. Have a great trading day.